Hey everybody, it's me again, Adam Chapnick with the Security Token Academy. Thanks for being with us here today. I'm excited because we are joined by the guys who I love from Solidus Labs. We have Praveen and Asaf. Thanks for being with us.
Thank you for having us, Adam.
Thank you for having us.
Yeah, all right. So you guys do a lot of interesting things. You know, you had talked when we were talking before about some of the specific problems that you solve on a technological level from your experience at Goldman Sachs. Can you drill down into those two things a little bit and what they are?
Yeah, so I started saying earlier about front running and how it's a problem that is occurring today in financial markets. So taking the knowledge we have from the Wall Street traditional ecosystem and then understanding how blockchain works, that's how we basically provide a new market surveillance system that is able to accommodate into itself smart contracts, blockchains, e-wallets, all those things that today's surveillance systems don't know how to interact with.
So, and the other thing was?
Regulatory reporting.
Right.
So, you know, at the end of each trading day at Goldman or wherever it is, in any trading house or broker-dealer really, you have to, at the end of each day, there's a big batch processing going on that is able to collect reportable data and then send it off to regulators. So if we're already doing the surveillance for different companies, for us it's relatively a low-hanging fruit to also do the regulatory reporting portion of the thing. But what I want to emphasize here is that today the regulatory landscape is still forming, and not many today can say, even the regulators themselves, can't say where things are heading exactly and how the regulation is going to be reportable. But that's why surveillance is so critical. That's something that we can do today. That's something that companies can show to regulators in good faith. Here, we're monitoring our system. We know what's happening underneath our hood. We can say whether or not there's any malicious activity that is being manifested, whether if it's front running or spoofing or other ways that malicious activity can abuse the system.
Yeah, I mean, it's so right on the cutting edge. You're on the edge of the wave. I mean, I think it was this week in the Wall Street Journal, there was some crazy stat that like 80% of offerings are spoofed. You know, it's like crazy. And of course, I'm acting others. I had never heard of spoofing until I read the article, but it was an amazing stat. And maybe you want to tell people what spoofing is?
Yeah, I mean, the statistics are enormous. I mean,
Yeah, I mean, that's just one of the things that we're dealing with. But I would like to go back to our traditional surveillance that we provided in Goldman Sachs, which is basically, and I know that in crypto world, the roles of broker-dealers, exchanges, as well as market makers is still taking a form. And the responsibilities that you get with it are going to come. So the surveillance that you have to provide, so just for an example, you are a broker-dealer and you get a customer order, you have to treat the customer order first. But if you put your own capital before the customer order, and basically that is front running, and you profit from the customer order, knowledge that the customer wants to buy a big order in, let's say, Bitcoin, just for an example, but and raise the price up for the customer, that is something that you're not allowed to do. And we can detect it in blockchain world, be it a centralized exchange or decentralized exchange, be it a broker-dealer, a hedge fund. So this is the kind of stuff that we are building currently at the moment. There is also market manipulation that goes on with just pump and dump schemes, if you've heard of them. There is also if you are trying to manipulate prices to gain certain advantage, again going by like knowing what customers are doing at the moment in the market. So all this is bread and butter when it comes to a broker-dealer trying to prevent fines from the likes of SEC, FINRA, and so this is what we want to provide to.
I would say that eventually what we're trying to do really here is to promote a healthy ecosystem and to reduce risk, increase transparency, and lower costs for those market participants.
Yeah, it's fantastic. I think a lot of the I mean, obviously on the institutional side, I'm sure, obviously they're super familiar with this, and that's why you were doing this at an institutional investor.
Right, yeah.
But that is that keeping them out of this game right now because there's no sort of institutional level activity like what you're doing?
I mean, imagine right now, not too long ago, Gemini announced that they are going to partner up with Smart, the surveillance system from NASDAQ. So it only goes to show, hey, how much there is a need for it. One of the most regulated exchanges in the US is saying, oh, wait a minute, we actually need this surveillance system to help us monitor things. And again, I would argue that possibly Smart right now can't accommodate for blockchain the way that we're building it, right? So Smart is an amazing system that can work with traditional trading systems, but not necessarily the way trading is manifesting itself with blockchain. Things are different. The way smart contracts are interacting with one another, decentralized exchanges, e-wallets. So things are not seamlessly, you can't just use Smart and there we go, we're good. We have a surveillance system that does it all. So it's definitely needed and it's happening and yeah.
So you're the CTO. So what kinds of things have you built that sort of accommodate the things that Asaf is talking about? I mean, you don't have to. Don't go under the hood too far.
Without going
caveman,
into
caveman, right? Caveman.
Yes. So I mean, without going into, of course, the details of the implementation, but being able to look at the market data. Being able to see what kind of orders coming into the market, analyzing how trading systems are built, how customer orders come in and how you actually send them to the market. And all this traditional knowledge that we've gathered, we are utilizing that, having blockchain technology experience from our projects that we've done for clients. We're trying to use blockchain technology and the financial knowledge, combining that together to build the product that we are presenting.
Amazing. So, do you think that now we talked about how from an institutional perspective, maybe they're waiting. You know, obviously you said Gemini starting to accommodate this to obviously to get more institutional capital in. But there's you know, some tiny percentage of the overall available capital is in Gemini. Do you think that from the other side? You know, maybe from the retail investor, they don't have any idea that most of these schemes that they're the victims. Do you guys have any intention of being retail focused to sort of let people know that you solve their problem, or are you ignoring that as a business practice?
As a business proposition, we right now concentrating on other businesses and being able to help businesses that then serve other clients. So if we know that there's a broker dealer that we help that broker dealer to protect its investors, that's, you know, for us, we'll be able to sleep better at night.
Right.
And also, in a way, you know, just very much the logistics of the business, it's easier. We come from that background, right? We come from a bank. We know what they expect to have and see and what they're used to. Serving this to clients, which is what I think you kind of like alluding to. Like, it would be considerably harder to make it like a client-facing thing.
Sure. I was thinking not so much like you would serve the client, but more that if you had some. It makes perfect sense what you're saying, but just the thought was that maybe if the vast majority of the retail investors are even unaware that there's a problem and they're getting their asses handed to them.
Part of the
maybe it would help if they knew, and then
Part of what we want generally, I guess, as a company is to really be advocates for a healthier ecosystem and to make sure people are aware. People are aware that there are malicious participants in this market, just in any market, and that they should use cautionary steps whenever they are purchasing, selling, buying any tokens, even securities, right? When I used to work on Wall Street, I always said to my friends, do not enter the stock market exchange unless you know someone who can safely kind of walk you through that path. So even it goes the same way for this tokenized securities economy, and probably with more scrutiny, right? You even need to be more on your guard.
Oh yeah.
These days, at least.
Yeah,
and
absolutely.
what we want to do is to bridge the traditional Wall Street to blockchain world and make sure there's a healthier ecosystem.
So your ideal clients are?
Brokers, hedge funds, and exchanges.
Got it.
Yeah.
Great. And do you imagine having like the Better Business Bureau stamp that like a safe exchange will have your little
that would be the ideal case for us. Having a Solidus Labs stamp means that you can be audited anytime, and then you will be fine. You won't have to pay any penalties if you were audited at some point, and it is possible with any of the financial institutions that there are discrepancies, there are front running, there is any malicious activity that's not detected or controls are not in place. If you have Solidus stamp, then you are fine. And that's like also the industry has to go and take this step first before even regulators go there to show a good faith that we are taking steps, we are going there. Gemini, I'm not sure anybody asked them to go and seek out the surveillance, but that's what shows a responsible organization would do, go and actually take this step and show to regulators, look, we are actually want to make things better, and just work with us, and regulators also get like an idea of like where the industry is moving and where the regulation should be to promote a healthy blockchain environment.
So in a bigger picture, what do you guys think about the general shift from ICO mania to security tokens? And I mean, I think I would guess what your thoughts are, but what do you think about that?
I mean, I think it's a healthy shift. I think that today, this is where things get interesting, right? Because I think there's just so much assets that are currently locked illiquid, and the possibility of making them liquid again, or not again, making them liquid on blockchain, and then to offer them to considerably a larger crowd, you're unlocking here just truly a lot of potential avenues for investments that weren't before open for anyone. So, I mean, things are moving, I think, in the right direction towards transparency, towards the market inclusion, towards the market, capital creation. So, I think this is fairly healthy, and I think that using the blockchain, would we be able to also make sure that, if done in the right way, that no one is being fraud, no one is being, doing any malicious activity, that everything is recorded well, audited, and reported as it should be in today's market. So I also want to say that we don't think that things are going to shift in the sense that the way of trade, the world of trade is going to change the way we know it, and reporting is going to change, and all of a sudden regulators are going to be, oh yeah, don't worry about it. Like this is you will be not as I would say harsh on this industry, but we actually believe that things are going to remain the same in the sense of your regulatory obligation are going to remain the same. It's only that now there's going to be a digital asset that would represent other things that today aren't represented in the market.
Got it.
So, and of course, they're going to be streamlined through blockchain.
Yeah.
So,
are there any characteristics of some of the other like asset classes? Like you're talking about the tokenization of global assets. Is there any reason why your job gets harder or easier in those different kind of asset classes, or do people just try and game the system the same no matter what it is?
It's a great question. Yeah, things are getting harder when you're dealing with different blockchains. Possibly.
Oh, interesting.
It depends which blockchain you're using to digitize what. Today there's. When we're talking about,
like, what's an example of a couple of different blockchains? Not you don't have to tell me which is the hard one, but or maybe if you can, I'm curious.
I mean, so Ethereum would be one that there's different ways you could possibly play around with pending transactions on each block and kind of try and manipulate markets. While Dash, for example, would work in a completely different way. So you really need to make sure that whatever surveillance system we're building is able to accommodate for different such things.
Wow. And are you guys kind of plugged into, I wouldn't even know what they are, the top 5 or something? I mean,
today we're with Ethereum, and we're also serving one hedge fund. We're already working with them. We're maturing the product. We want to completely have it nailed down. So before we go to the market, we know that it's spot on.
Right.
I think, again, as a company, we like to make sure we're grounded and practical and delivering a product that is robust and holistic. So instead of hurrying and like selling this to like an exchange and another hedge fund, another broker, we want to make sure that the product is matured and ready to go to not disappoint anyone. And mainly so it actually protects investors, right?
Well, that's the whole idea.
That's the whole idea.
I love it. Yeah. So, okay, looking ahead, let's say next year, 12 months, where do you hope / expect you guys will be?
Right. So as I mentioned, we are maturing the product these days with a hedge fund. We are projecting, as people are talking to us and knocking on our doors and wishing to register to the beta of the product, we are projecting to be with additional hedge fund, probably exchanges. Exchanges are big. More and more are opening. More decentralized exchanges are opening, which is harder to do surveillance there. The opportunities, as I see it, to do malicious activity on those exchanges are also quite there today. So we are also expecting within 12 months to probably be venturing off from the hedge fund space onto the exchanges. And yeah.
And on the same timelines, I would think the regulatory landscape would slightly shift towards more now that Wall Street is taking into account where blockchain and crypto-based asset-based cryptocurrencies are coming into picture. Our colleagues or our partners are building these trading systems that are the standards of Wall Street, and more crypto broker dealers. Hedge funds are already there, but crypto broker dealers are coming into play. And so the roles of broker dealers, market makers will be defined clearly. And so for us, our business becomes a little bit more oriented towards our clients, specific clients, and having more partners to help out and build system towards. So I think within 12 months we'll be at a much better place, much clearer requirements, and we will be seeing a very familiar structure to what we saw in a traditional finance, and so we'll be in a much better position to help them as well.
Interesting. Well, great. Well, thank you guys for sharing with us what you're up to and what we can expect in the coming year. And we wish you all the luck in the world, and come back and keep us posted on how it's going.
Yeah.
Thank you so much.
Thank you very much.
Thanks, guys.
Thank you.